Hi there, I'm Jill Urban, and welcome to another special edition of On the Move. Halstead recently released its third quarter market report, and it looks like we're seeing a little bit more of the same. Inventory is up as sellers are hesitant to lower their prices and buyers are in no rush. Joining me now to take a look behind the numbers is Halstead's chief economist, Greg Heym. Hi, Greg. Thanks so much for being here again.
It's my pleasure as always.
Thanks for coming. Let's talk numbers. It looks like not much has changed since the second quarter. Kind of similar picture. Tell us a little bit about that.
Yeah, we're still in what I've called this painfully slow correction where there is too much inventory to go around for most segments of the market. Buyers are very well aware of this, so they're in no rush, like we said in the intro. And sellers, they see a great economy, a great stock market, and they want to know why I have to lower my price at a time where everything else looks so great. So this stalemate has been going on, particularly the high end, for over 2 years now. And it continues to be reflected in fewer transactions each quarter. Maybe the most alarming stat we saw in the third quarter was the third straight quarter of at least a double-digit decline in sales from the prior year.
That's a big
number.
number.
The last time that happened was the first 3 quarters of 2009, right after Lehman Brothers. The declines aren't that bad, but 14% fewer transactions. We didn't really have a lot of transactions a year ago, so it shows you that we're at this stalemate and things just are not moving as quickly as they need to.
Well, let's talk pricing. So the report shows a 2% decline in pricing, but most people are a little confused by that because they're feeling it to be more than that. So explain that discrepancy.
Well, we have to remember what the average price is, what it shows, what it doesn't show. I mean, it's basically telling you where the typical apartment is closing at in the quarter. If we say it's down 2%, we're not saying that every apartment is now worth 2% less.
And it's also what's closed, not necessarily what's lingering on the market.
Right. Think of it too this way: is the S&P 500. The S&P 500 can go up today, but that doesn't mean all 500 stocks increased in value. And I know you only will care about the ones you have, but it's not a way to price your apartment by itself. You can't say the market is 2% lower, I need to cut my price 2%.
Right.
You have to look at the comps for your unit, the inventory in the area. You'll know pretty quickly in this market, if not immediately, that you're overpriced because of the lack of interest in your
Right. So don't use this to gauge your pricing.
No, and especially when a market is in an adjustment period, closings are, past couple of months closings, those contracts were signed a couple months before that on average. So you really have to look at what are the current listings on the market, what's coming on, what just went into contract, and take it from there. And obviously work with your broker who will have all this information for you.
Now, some things are moving. We are definitely seeing some movement in certain areas. Where are we seeing more things happening?
Well, the one common thing that every apartment that sells has, the same is they're priced correctly. I know that seems very obvious, and priced correctly from the start.
No drops.
The more overpriced you are at the beginning, I think the harder of a hole it is to climb out of, because people always want to see what's new. They go to websites, they want to see what's on the market in the past week or two. Coming in at a price that maybe isn't where the market is right now is really going to present a challenge, because then you have to start cutting. You may not know how much to cut, and then you're trying to catch a market that is already ahead of you.
Yeah.
So I think that's one of the challenges in this market. Areas like Upper Manhattan that still have relatively low inventory and relatively affordable apartments are still doing okay. And there are smaller segments in some of the other markets, but it used to be a tale of two markets. There was luxury and there was everything else. Luxury was struggling. Now we're starting to see that filter down.
So luxury's moving again now a little bit.
It's starting to. One of the things that we saw was a big jump in closings of resale condos over $5 million. Now that it may sound like, things are stabilized and prices are where they need to be, but those apartments on average were cut 16% off their original asking price.
And on the market for a long time.
Right, and that's the thing. The time of the market is up 11% from a year ago. You're still, once you get the price right and start negotiating, you're still typically within 3 to 5% of that price, and things can happen quickly from there. But the biggest thing is get it right from the beginning, know where the market is, don't be afraid to get ahead of it, and be aware of all the real-time information. We understand the frustration that great economy that just keeps picking up steam, great stock market, New York City is doing wonderful, record lows, everything it seems. They talk about unemployment and everything. So the bottom line is when you have too much to sell, prices need to adjust.
But what about, the timing right now with tax and mortgage changes and the midterms coming up? How is that all going to play a role in this?
Well, it's a third straight year of a second quarter time bomb, it seems, waiting. We had Brexit, we had a presidential election within a couple of months of each other, and 2016 last year was tax reform, and that being passed, and now we have midterms, and obviously we just had a very ugly Supreme Court confirmation process. I think one of the things we do realize is that we can rebound from this stuff pretty quickly. We're a very resilient market. We don't want to keep reminding, but we've got past 9/11 in terms of the market. We'll never forget what happened. We've had natural disasters. It just seems when you're going through this that it's never going to end, and to find when things will get better. So we have the election in about a month. Then as we get into the beginning of next year, people will finally see what their taxes, what's happened to their taxes. And maybe that will open up the market a little more as people realize maybe it wasn't as bad as I thought, or sellers realize when they do their own taxes, wow, I need to make an adjustment. But it's always the unknown. It's always the fear of what can happen that can freeze a market dead in its tracks.
So your advice to the sellers is really to price it right from the get-go. Don't mess around. But what about to the buyers who are really trying to hit their mark with timing now with all this going on?
Right. Obviously, nobody wants to buy until the bottom hits, right? And just think, how many stocks did people buy in March of 2009 when the stock market bottomed out? How many people got Citigroup at 75 cents? It doesn't happen all that often, even with the stock market, where there's so much data to look at on literally by the second basis. I think that you should be out there looking actively. You should be aggressive with your offers. I think there are sellers now at the end of the year that may be more willing to negotiate because they're afraid of what's coming on in the spring. Find an apartment that you really want and then determine, what am I comfortable paying? And then offer that. If you wait, it may be cheaper a couple of months from now, but that apartment may not be
available. Right.
And if you wait till you have evidence of a bottom in a market, you're typically already past that bottom.
For sure. Okay,
don't be afraid to get it on sale. It's a good thing.
Right. Don't keep waiting and waiting. So I have to ask your prediction. Where do you think we're headed? Next quarter, what's your guess?
Well, the fourth quarter typically isn't the time of the year where things turn around.
Right.
People are thinking, let alone midterms and tax reform. But they're thinking about holidays. The weather isn't really one you want to go out and look for homes in. So it's not a time of the year typically where things start to turn around. You really never know where a market is until you get closer to spring.
Got it.
And I think we're going to continue to see this painfully slow correction. Hopefully the momentum that we saw in the resale condos, expands to the larger market. And I think once people start pricing correctly, the demand is still there. The employment
just gotta
growth
align.
And obviously interest rates are something people will be watching, but I think obviously they're moving higher. The highest rates now we've seen in about 7 years. We have to remember though that the average 30-year conforming mortgage rate over the last 40 years is 9%. So 4.5%, 4.75%.
Put it in perspective.
Right. All we know is that they used to be a lot cheaper a year ago, and I certainly can understand that.
Right. So you can't look back, right? Just got to look forward.
Don't blame the Economist, though.
Right. All right. Well, we'll see what happens next quarter. We'll have you back and see where things are. But thank you so much for joining us. And also, thank you so much to the owners of this magnificent apartment located at 101 West 12th Street, the John Adams Building. This is an expansive 2-bedroom apartment. It has a 600 square foot terrace with panoramic open views of the city and the river right here in the heart of Greenwich Village. So that's a look at the market report. We'll see you back here next quarter. For On the Move, I'm Jill Urban.